Hello traders, welcome to part 2 on our course, right? So if you have not watched part 1, I advise you to go and watch part 1 as to understand what we are doing on part 2. So I told you I was going to teach you how to trade step by step, and I've already uploaded part 1. So this is a part 2. And for you to better understand this part 2, it's good for you to go and watch part 1. So this part 2 is going to be all about inducement, right? I'm going to explain to you how we use inducement. And basically on part 1 we talked about pullbacks. So I'm going to be showing you how to use pullbacks as inducement in the market, right? And how to use the inducement now to identify valid break of structure. So this is the agenda for this part 2. And yeah, stay tuned and let's go directly into the chart. So first of all, we talked about pullbacks, right? So if you look here, you see that you can clearly see that we have two pullbacks, right? The first pullback, this is where our first pullback low is, and this is where our second pullback low is. So in this scenario here, we have two pullbacks, right? Now, what are inducements? So inducement is the first pullback. So moving up like this is a bullish market in this case, right? So moving up like this, our first pullback will be this one up here, right? This, when I say first pullback, I mean starting from where market is and you look downward. The first pullback that you see, it's what we call inducement in the market. So this inducement can be used for various things. Firstly, the inducement can be used for liquidity, to identify liquidity, and the inducement can also be used to validate break of structures. It can also be used to enter trades in the market, right? It can be used for your entries. So that is the reason why this lesson is very important for you, and you should make sure that you have mastered this before you move to the stage 3, which I'll be uploading in the coming days ahead. So part 1, pullbacks; part 2, inducement and breaks of structures. So now looking at this, right, the law states that if you look from this high, you look downward in an uptrend, the first pullback that you see, that is called an inducement. You can label it IDM, or you can just label it X, just X, right? So this is how I represent mine in the chart, to be specific. And what we normally want to do to use this inducement for at this moment is validate, locate a break of structure, right? So now for us to have a valid break of structure, what is the criteria? The market will need to push below, take out this inducement, and then give us a break above the high, right? The high. So now looking at this, right, we can see that from here, what we want is for the market to create a bigger pullback, which is even bigger than this one here, so that it completely violates the low of this pullback here like this, and then goes ahead like this. So when this happens in the market, this is what we refer to as a break of structure at this point, right? This is our break of structure here at this point. We label that a break of structure. So the principle here is simple. So once the market breaks above this high, now we now have a valid break of structure. Now this here will not be a valid break of structure because the market has not taken out any form of inducement here. So now, right, for our next inducement, for our next break of structure, we'll expect the market to create another valid pullback, something like this. Then once the market is able to take out that pullback, it goes ahead and breaks above this high. This will be our valid break of structure. So remember, here we have two pullbacks, but we use just the first one, looking from upward, right? If you look from this low downward like this, we use just the first pullback. So that is what we call our inducement. This will not be our inducement, right? If you have, at this point in time, let's say at this point in time, we have this pullback here. When the market was here, we had this pullback here, right? This pullback was our inducement. But now when the market came up here, it created this new pullback. So once it created this new pullback, this pullback was no longer our last pullback. So it was now this pullback that was our last pullback in this case. So we transferred this inducement from this low to the current low. So whenever the market creates a pullback, a valid pullback, sorry, Whenever the market creates a valid pullback, we move our inducement from the previous pullback to that newest pullback. So that is how this works, right? So whenever the market takes out that newest pullback and closes above, we'll have a break of structure. Now let's go over to an example. Going over to this example here, what you can see from here is this market has been pushing up. The market pushed up like this, created this pullback, and then when it went up here, it came back, took out this our pullback. It took out this our pullback, right? This that was the low of our pullback. So the market took it out. So it doesn't matter if the market takes out the pullback by a candle body or a candle wick. All that matters is this low should be taken out. So once the market has taken out this pullback here, we expect the market to push up. Once the market push up and closes above this move, right? This move is where the original move that went for inducement started. So when this move, when the market creates closes above this higher high here, we have what we call a valid break of structure in true SMC. This is very simple. This is a very simple logic, right? Once the market takes out your inducement, it closes above this high, we have a valid break of structure. Now, I know why some people will mark this as a break of structure, but definitely that is not a break of structure simply because the market did not take out any inducement here. It did not take out any valid pullback here. There was no valid pullback here. And so this was just our inducement. This was our last pullback. So now for the market to continue in this case, we'll expect the market to create maybe a pullback here, right? And then once it takes out this pullback, goes above and closes above our range here, then we can have our next break of structure to the upside. Remember, this will not be a break of structure. So this is how we mark structure in the market. If you go to the market, you backtest this, you look at the daily charts, you are going to see this a lot, right? And you will see that if you don't mark the market like this, or if you are not technically marking the market, you end up marking this as break of structure. You mark this as break of structure, change of characters, and you'll be looking to maybe take the opposite and thinking that the trend has changed direction, which the trend has not. So this is the correct way you should mark your structure. So let's go over to our second example. This is our second example here. So from here, you can see that this market has taken out an inducement. This is our inducement here. We label that IDM, IDM. So this is our inducement at this point. This move has already taken out this move, has already taken out this inducement. So after taking out this inducement, we're waiting for the market to go above this high. Now here you can clearly see that the market went above this high. But now what is wrong in this case is the market did not close with a candle body. This is a wick. This is a wick of a candle. So we also, for a valid break of structure, we also need the market to take out a valid inducement, then close with a body above our high. So this market has not closed with the body here. So we will not mark this as a break of structure until maybe in the future we see the next candle form, or this candle then goes ahead and closes with the body here before we can identify this as a valid break of structure. But for now, we are still waiting. We are still waiting for a valid break of structure here. As at the moment, we don't have any. So now in a downtrend, right, this is just the opposite of what will be in a downtrend. So in our downtrend, let me just quickly show you how this market will look like in a downtrend. So please don't be bothered about the candlestick colors. Don't be bothered about the candlestick colors. You can always change the candlesticks colors any ways you want. These are I personally took time to draw out these candlesticks, and I cannot take time now in between the lesson to be changing each of the colors. So let's just take these green candles to be bearish candles, right? Candles that are moving down. So now if you look at this here, the same principle for an uptrend applies in a downtrend. What are we looking for, right? We need the market to push down the last pullback, right? The last pullback is called our inducement. So this is the last pullback. The high here is what is referred to as the inducement. So once the market has taken out that pullback and closes below the move that created this correction, to take out this pullback, we have what we call a valid break of structure. So this here, it's our inducement. That is our inducement. And over here, we have this valid break of structure. Remember, right? Remember, this has to be a valid pullback. So if you have not watched pullback, I still insist you go back to part one of this video. The video course will not be made up of too long chapters, right? The chapters are not that long, so you can easily watch them and understand. You will not waste time. I've packed in as much knowledge as I can into the short time that I had to explain to you this video. So now this market has taken out our inducement here, and we have the market pushing down to create us a valid break of structure. So if you transfer this logic here over to the chart here, we are still going to see that from here, right, we have this inducement. So as I was saying, if you transfer this logic, from here to here, what you are going to see that this pullback here, it's what we identify as this pullback here, right? This is our inducement. And we said once the market takes out this inducement, it doesn't matter whether it takes out the inducement by a week or a candle close, right? All we need to know is the market takes out our inducement. So once it takes out this inducement, then we can wait for the market to go below, break below this low that created this move that took out the inducement for us to have a valid break of structure. So if you transfer this logic here over to this zone here, you are going to see that this is where our valid break of structure stands. This is where our valid break or structure stands here. So this move is this move here. This move is this move here, right? So this is how the model of our valid break of structure will look like in the market. So the reason why I'm teaching you this model of break of structure is because in the next class, I'm going to be showing you how you can now use this block of this valid break of structure to identify, to map out structure in the market and easily predict the direction of the market. So let's switch over to this zone here. The very thing applies here, right? You see that from here, we have this market pushing down. The market pushed down, created this pullback here. When it went ahead, took out this pullback, it dropped, failing to take out this low with a body. So when you are marking valid break of structures, you need to consider that the market needs to take out the low with a candle body, a full candle body, right? A candle body should close below this low. When I say candle body, I mean something like this, not the wick. So once this market has managed to close like this, then you can then have your valid break of structure. But if this candle here is still a wick, you need to wait for the candle to finally close below this low, right? Or the next few candles to finally close below this low before you have your valid break of structures. And if we happen to move, if we happen to move now to this example here, basically I told you the first pullback, right? When the market is moving down like this, the first pullback that you see, if you start from this low, you look over, the first pullback that you see, it's what we call our inducement, right? I've already explained that in the bullish scenario, and I'm explaining this in a bearish scenario. So you need to wait for the market to always wait for the market to take out that high, then goes below. Once it closes here, then you can have your valid break of structure. Now you need to remember that a valid pullback doesn't matter the color, right? It doesn't matter the color. It doesn't matter if it's one candlestick. So long as you have watched part one, you understood what we meant by valid pullbacks, right? You understand all of these things that I'm saying in this part. So if you have not watched part one and you are here, then you have no business here. Go back and watch part one, and then you can follow up this lesson properly. So guys, thanks for watching, and I'll be dropping the next video in the playlist very soon. So subscribe, turn on that notification button so that you'll be notified when I drop the next video. And remember, the aim of this is to organize the course in a way that you can watch, understand, and implement it. Majority of what people will post on YouTube will be educational for you, but it will not be in an organized way that you can organize it and make sense out of the videos, right? You learn one thing here, learn one thing here, and to organize the concepts now will be what will throw you off course and delay you in your trading journey. So I've decided I'm organizing this in a chronological order. So you as the viewer and as a student, you need to be patient and watch these videos in a chronological manner so that you can properly understand. And please, for those that are already advanced, you can check out my Telegram group. The link will be in the description of this video. Peace and out.